Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. And as always, I'm here to bring you the latest price action, data-driven analysis on the markets. All right, so suffice it to say, yesterday, another update in the markets. I believe it was the 8th straight update in a row. Historically, it's rare to get 8 updates in a row, even rarer for the percentage move in the market. S&P 500 almost up 10% from the lows of just 2 weeks ago, Monday. So incredible moves. Now, the kicker here is this. Yesterday was another up day. The volume, however, on the S&P was the lightest in over 2 years. Why is that happening? Well, basically what we're seeing here, folks, is that the volume on the markets is very light because it's late August. That's natural. In addition, we're waiting for more economic news to see whether or not the economy is still humming along as the markets believe right now. In addition, we have Jerome Powell and the FOMC big meeting in Jackson Hole, and Jerome Powell will speak on Friday. So a lot of this is that a lack of economic news, not a lot of earnings news. Yeah, we had Palo Alto yesterday after the close. We had Lowe's this morning, but those aren't really market movers. It's not like an Nvidia or an Apple. All right, speaking of Nvidia, next week, I believe, is Nvidia, so that's going to be big as well. All right, so let's jump in right here. Let's go to the charts. Let's see what the pre-market is doing. This is the NASDAQ chart, but I do want to flip over to the S&P pre-market. I usually like to cover what the markets are doing here early on. So what we can see here, this is where we closed yesterday. This was a classic little short squeeze end of day. And what we can see right there, very clearly, the markets are essentially trading flat on the morning session. We were up a little bit earlier and then have faded just a little bit into the open, or about 25 minutes from the open at this point in time. Now, flipping back to the daily chart here, guys, again, really interesting to see. Incredible move to the upside. You can see you had a pivot point here. It blew right through there. There's our 8 up days in a row. 1, 2, 3, 4, 5, 6, 7, 8. And again, we've talked about historically that being very, very rare. Now, one of the things I'm watching, if the markets continue to rally up, you have a gap fill right here. This is a gap, and we gap down right here. So there's created a gap. Gap fills tend to be resistance. In addition, this is a double top, right? A DT, we'll put it right there. So that's a double top as well. So if the S&P continues to rally up, that 564 and change on the SPY will be significant resistance, double top with a very extended market. The more extended you go, the more rubber band-like it gets, meaning that you extend the rubber band a little bit, it's not that extended. You can pull it more and more and more and more and more. Eventually, you get the snapback, right? The rubber band snaps, and that's essentially how you look at charts when they get more and more extended here. So up into resistance, we're watching to see, do we go up a little bit more, basically another $4 and change on the SPY. If it does, we get into that double top. You would expect, as a technician with probabilities, that you'd get a pullback there. Now, does it guarantee a pullback? The answer is, of course not. There's nothing guaranteed about it. It's all about probabilities. So what you look at here is, as you're bouncing, what are the probabilities of a pullback along the way? Well, let's just take an arbitrary level right there. Maybe up here it was, 40% chance of a pullback versus 50%, let's do an arrow there, versus 50% of upside. So it was still favoring upside. Once you get up here, maybe it's 50-50, right? Once you get up here, now it's starting to favor a pullback by 60-40, right? And if you get up to here, it would be like 70% chance of a pullback versus 30% that it continues up. And that's kind of the odds here of what we're dealing with. So even when you get up to these levels, it doesn't guarantee it. There's no such thing as 100% in trading or investing, but it's all about probabilities. You want to be that house, the casino, versus the gambler that comes into your casino, and generally over time the gambler loses money and over time the casino wins. Okay? All right, so that's where we are at this point in time on the S&P 500. I did want to show you the NASDAQ 100 here. The NASDAQ 100 daily did fill a major gap, and again, that again on the charts here can be seen right here. Right, so there's that gap fill right there. Now there is another gap right up here that we have to monitor, but right now you go with the level that we are currently at. You can't assume, never assume in trading. Once it hits a level, okay, it hits a level. Until it breaks that level, you can't assume it will break. All right, that's the problem a lot of investors face, by the way. They're always assuming it's going to go higher or assuming it's good. And then the levels obviously have the control. We don't have control. So right now you are at gap fill. This would imply a slight probability to a pullback because, again, gap fills are resistance. We have an extended rubber band market, probably about a 60-40 chance of a pullback here. All right, so again, 60-40 chance of a pullback off of this level. If it were to get up here, you'd probably be at that 70% chance of a pullback versus 30% chance of not pulling back. All right, pre-market, what levels are we looking at here? We can see Palo Alto Networks chopping around a bunch of technical lines that I have on my chart. We'll look at those on the daily in just 1 minute. But what we have here, the initial earnings were released, the stock popped, it then actually came back and went negative, then went positive, and basically it's fluttering just slightly net positive on the day. Now again, the easier way to look at this will be to look at the daily chart. You can see number one, just remember these lines. We're just above one line, but we're definitely below the second line, and if we flip to the daily chart, these are your technical levels right here, all right? So here's resistance number one. Price is just above that right now. That was that first line that we were just above pre-market. We'll have to see when the market opens. Do we stay above that or do we come back in? Where do we close today, right? These are all little things that I'll be paying attention to. If the charts really push us up, there's a gap fill right here, and that's what this resistance number two is, and that's right around 366, I believe, right around that 366 level. That would be major resistance. Yesterday after the bell, when we popped up on Palo Alto to the highs, we basically got right around there, just shy of it. That, again, is the resistance to watch and monitor. Now, if Palo Alto rolls over, which I doubt it will, at least in a significant way, we do have an upsloping trend line right here, and this level down here, right around 305, would be technical support on the chart. As a technician, as a technical trader or investor, you would be buying this level right here as a buy. That would be a buying opportunity, but you would keep a stop at any confirmation below that level so you minimize your risk on the trade while maximizing buying for the bounce off of support, right? So again, always kind of look at that angle. Where does that trend line fail or how does it fail? And with confirmation, that would be what I would look for in terms of failure. Lowe's reported earnings this morning, guys. Lowe's, again, let's take a look here. The stock is flattish on the day, just slightly down. They basically did warn. They came out and said, again, for the millionth time. I mean, how many times have we heard this? But it's so interesting to look at the S&P right now and just see the skyrocketing S&P where investors are just piling in and chasing these type of things. But Lowe's this morning comes out and basically says the consumer is slowing down, which we've heard from so many companies. The stock in terms of Lowe's is slightly lower, not down much, not tradable because it's not enough volatility, but you can see again it is trading slightly lower on the morning session. Yesterday I had annotated this chart up and kind of I did a Schwab interview and actually talked about this, but here you can see basically this is what I had written yesterday. I was neutral on Lowe's. You know, it was above support but below resistance, just chopping around here, so it could come down in this range or it could go up here. And essentially that's what it's turned out to be. It's basically flattish to slightly lower on the day, really essentially a neutral, and the chart was guiding me to that understanding going into those earnings numbers. Okay, a couple other charts I want to just talk about. We got to talk about Nvidia, guys. This is incredible. So Nvidia is at a point now where it has gone up a whopping 40, I think it's 43%. Let's see. Yeah, 43% rally off the lows. Incredible, incredible move. All right, now to put this in perspective, right, Nvidia is now back above $3 trillion in terms of market cap. $3 trillion. This move, the stock gained over $1 trillion. $1 trillion created out of thin air, essentially, in 2 trading weeks. All right, incredible. I've never seen that in my life before in such a short period of time. Obviously, in my earlier years in trading, there weren't trillion-dollar companies that were, left and right in every which way like there are today in terms of the Magnificent Six. But in any case, just to see that type of move is incredible. Now, this was a level where I was like, all right, man, Nvidia is going to pull back at this level. We had a gap fill right here. We had a down-sloping trend line. And then what's so fascinating about this is that if we go to the intraday Nvidia chart, it really was, and I'm going to take away the regular hours here. Look at how it was trading right at that level here, right here, And then in the last 10 minutes of the day, this is a 10-minute candle, it surged up. Now, what's going on here is what's called a short squeeze, all right? So this happened in the S&P 500. It happened in the NASDAQ. In fact, if I flip over to the NASDAQ 100, on the 10-minute chart, we can see that as well, right here. See this move? Now, just to explain what's happening here, because this is something that took a lot of years for me to kind of understand. When you have a market that's trading slightly higher all day long, there are shorts, day traders, every single day or during the day that are shorting the market, saying, wow, this market's overbought, it's going to come in, I'm going to short it. Now, I've learned my lesson. Yesterday, I was thinking about shorting that gap fill. We even talked about it here, and I said I might do it. I didn't do it because the volume was too light. They say don't short a dull market. There's a reason for that. When you have volume that's that light, and you have day trade shorts here, they're all shorting along here, right? And the market's never, on Nvidia or on the Qs, the market's never getting that rollover for them to cover their short for a profit. And so what ends up happening is that all of these shorts are now accumulating. Let's just for hypothetical, we'll say 5 here, 5 here, 5 here, 5 here, 5 here. All right, so there were only 5 here, then there were 10 here, 15, 20, 25. Now the problem is, at the end of the day, there's 25, hypothetical, right? It could be 2,500, it could be 2.5 million. At the end of the day, all these are out of the money, and day traders, remember, you get 4-to-1 leverage day trading. Okay, so if you have 100,000, you get 400,000 to trade, but you can't hold that much overnight. So you have to cover some of your short, if not all of it. A lot of day traders don't want to hold overnight, and so they ultimately have to cover, which creates this spike here. So that's, again, what we call when a market doesn't give an exit for shorts throughout the day, which this clearly didn't, then at the end of the day, the shorts throw in the towel. They all cover at once. And when you cover a short, you actually have to buy that stock back. In that case, you get this pop to the upside. So that, I just wanted to explain what's happening on an intraday basis to create that type of end-of-day pop. All right. The next thing I want to talk about, folks, is oil and oil sending a warning sign to the markets and investors. Now, this is really, really important stuff, all right? This might be the most important thing we're going to talk about today. So let's punch up the U.S. oil chart, okay? And if we go to the daily chart, what we can see here on the oil daily chart is that right here, let's go to this right here, we'll annotate it out. This was the low on the stock market. This is the oil chart, but oil bottomed at the same day as the stock market bottomed, okay? So that makes sense, right? All of a sudden, the stock market was like, wait a minute, maybe economic data is not that bad. Maybe we're not going into a recession. Heck, we're going to have a soft landing. Oh, what the heck? We're going to have no landing at all. Market's great. Economy's great. Perfect. Everything is perfect. That's what the stock market was saying, right? It slowly started. So oil rallied up, which makes sense because more demand, right? If the economy's not slipping into recession, there's more demand, hypothetically, for oil, and therefore oil should go up, okay? Now, what's happened here is the stock market has continued to go higher. Oil has started to fall. What's going on here? Well, what's going on is this. You have light volume in the stock market, which is small retail investors buying, right? Money just flowing in. And because it's light volume, the retail investor can really attribute or push the markets up. So retail money coming in. The reason you know it's not big money is because if big money was involved in the S&P, the volume wouldn't be at 2-year lows, right? Big money has big money. It would be more volume. So you know that it's small retail money that's continuing to push the S&P higher. But the big money globally is still trading oil. And oil is telling us here, the oil traders, the mega billion-dollar firms that are trading oil, they're saying that, yeah, initially there was due for a bounce. We had a down move on oil, right? It was due for a bounce with the stock market. But now you're getting this crocodile jaws, right? We can do some teeth here, some teeth here. The crocodile jaws are opening, which tells you that smart money or big money is saying oil needs to go down because globally there's going to be less demand, which is not a good economic indicator, while the small investors keep buying into the no landing scenario and pushing the S&P up. This has to correct at some point meaning that at some point either the stock market has to come in and readjust to where oil's going, or oil at some point has to rally back up, or maybe it's a combination. Maybe the stock market comes in a little and oil goes up a little. We don't know. But what I do know is that when you're looking at a chart and you have oil going down, that is not a good economic. That's not a no landing scenario that oil has just fallen 8%, right? 8% here in a straight line down after bouncing. It's basically erased the entire gain that it had on the stock market low where this change in narrative came through, while the stock market has continued to go up. Something is amiss there, guys, and I do just throw that out. Do what you want with it, but something is amiss, and oil is telling us something's going on here. All right, guys, on that note, I want to just take a quick break. We're going to spin and find out who gets to win the live day trading room. You guys know we love doing these giveaways here because, again, it just gives us opportunity to give back to you guys. There we got it. There we go. Popping up there. So there we go. It's rolling through all of your kind words and comments. I appreciate them from yesterday. The winner today for the live day trading room, 1 month free, $400 value, BC8474. So BC8474, congratulations. Reach out to support@verifiedinvesting.com to claim it. And again, you get 7 days. Otherwise, it goes back in the pot to give away to someone else if you don't claim it within 7 days. All right, so that's the winner. Let's go right over to the wheel and let's spin the wheel here and find out what we will be giving away tomorrow. Let's see what we got. Awesome. 3 months free of Smart Money Crypto. So Smart Money Crypto, I just bought a crypto last night, in fact, in the Smart Money Crypto service. And again, it's already in the money nicely as we're seeing a little bit of a pop. We're going to go over the crypto charts in just a minute here. But that's, again, what will be given away tomorrow here in the game plan. And don't forget, guys, you just have to basically share the game plan on one of your socials and then post where you shared it so that we can verify that we see it there that was shared, and obviously be a follower of Verified Investing, and then you are entered in to win these daily giveaways that we do. All right, on that note, we're going to take a quick 30, 45-second break to just take a look at smart money stocks and ETFs. Take it away. Hey everybody, welcome to Smart Money Stocks and ETFs. My name is Gareth Soloway. I'm a verified pro trader here. 25 years of experience. I've been through it all from the dot-com bubble through the Great Recession all the way to the current markets. In this service, you're going to get chart posts 24/7. When I see something morning, noon, or night, or even on weekends, I'm posting up the levels, giving you analysis and everything you need to be fully informed about the truth, the data, the technical analysis within the markets of stocks and ETFs. In addition, you get exact entry and exit signals from me with suggested portfolio, position size, everything you need to conquer this market and make money for the long term. All right, guys, we are back. Let's get right into Bitcoin. Speaking of crypto here, we're looking at Bitcoin still within that sideways mid to long-term bullish consolidation. We are seeing Bitcoin upticking today. We did get above 60,000. One of the things I want to show you today, guys, is this. So we have a beautiful parallel channel, right? All aligning all these highs along here. And then what we could see is this low, just extending that parallel down. We did pierce it down here on the panic, but again, remember, that was when the stock market was down like 5-6% on the day, so it makes sense that crypto was flushing there as well. The point being is this is a parallel channel. Notice the midpoint. I don't know if you guys can see it, but there's a dotted line at the midpoint. Notice how that is what's keeping the market in check right here. Okay, right along these lines. And so what you're looking for as a bull, so again, the mid to long term remains, as long as this channel remains sideways to lower channels like this, they eventually, probability-wise, and that's important, they eventually probability-wise break to the upside. All right, but the midpoint is kind of that pivot line we've been talking about. Price needs to get above that to have a shot, right? We have to get price above this level. It's right around that $61,000 level. If we can get above there and close and confirm, then you should easily head back to the high end of the channel. But notice again how price continues to stall right at the midpoint of the channel. Channels are amazing like this. When you find a good channel, you'll find that the midpoint of the channel actually works as a minor level of resistance like it is right here. It still goes through, it still goes up and down, but you will notice, like even right here, look at this, right? So if we go right here, look, the midpoint of the channel was right there, which pushed it back down to the low end here. Look right over here, right? So again, you can see how the midpoint does have some factors to it where you can use it as a shorter term minor resistance or support level. All right, so again, Bitcoin, it needs to get above this level to push to the high end. The longer term remains bullish. The shorter term, to be honest, as long as we're below this midpoint, it could come back down to this low here, okay? Next up, let's take a look at gold, and then we'll look at silver. Gold continuing to push up today. After pausing yesterday, you had this upsloping trend line. We are now above this upsloping trend line, continuing to move up. Now, I'm going to show you guys something that I've been playing around with. We're going to go to a logarithmic chart of gold and go back a long way. So let's just jump into this here. I'm going to erase this trend line for the time being. And what we can do here is flip over to the log chart. And what we do is we'll flip to the monthly, and we'll zoom out, right? So we're going to zoom all the way out here. And what we could see is if we put a trend line in here on this chart, we draw it from the high of 1979 to the high of 2011, and we extend that out. Look at this. This is probably our next target level on the chart of gold. Okay, so again, assuming we continue up in the near term, this is where you have to start thinking there could be resistance. The level's around 2660. So again, we're only about $135 off that level at this point in time. But again, sometimes when you go back far distances with big moves in charts, and this is why logarithmic charts work well in crypto, is that you have these major upside moves, and the only way you can smooth out and draw trend lines and use technical analysis is if you flip over to the log chart. So I don't use the log charts very often on gold, to be honest, but in this situation, when I'm looking back to 1979, it makes sense to do so, and that puts us in this 2660 range. And obviously, it's subject to, you know, slightly above, slightly below, but that's my next target on gold here in the near term. All right, next up, let's look at silver. See what silver's up to. Silver continues to go up. One of the things to note on silver here, I thought we would pull back off this level. We blew right through it. Awesome. I'm still long silver with Smart Money Commodities members. That's okay. So where are we likely going? And I think I told you guys yesterday, you take this high and this high, you connect a trend line down. You're looking at basically 30.5 would be your next target zone, right? Down sloping trend line. If we get through there, double top at 32. But right now, no pullback. It's strong, strong, strong. My only concern on silver is this, right? Is that right now the stock market is in this narrative that everything is going to be fine. We're seeing it continue to go up. And I think that's influencing silver and causing silver to pop. That right now, no one's expecting a recession anymore. I mean, 2 weeks ago, everyone was like, oh my gosh, in a day we're in a recession. Now it's no one's expecting it. My only fear is that where is silver going to be when that narrative starts to flip back to, oh my goodness, maybe we will have a recession? Because it will happen, folks. Again, whether it's later this year or next year, at some point it will happen. And the thing that I always point out is that if we don't have a recession, then think about this. How much is the Fed really going to cut rates? If they cut rates too much, inflation's going to roar back if we don't have a recession. So you have these scenarios where, okay, no recession, fine, let's go with that, but then the Fed's only going to cut once or twice and bring interest rates down a little bit. If we go into a recession, then yeah, they'll cut a lot more, but we're in a recession. So it's kind of like a double-edged negative sword here at this point based on valuations. And obviously with silver, we just have to monitor when that narrative changes, since silver, again, is at least 50% on industrial metal. Next up, let's take a look at, we looked at oil already, so let's flip over to natural gas. And natural gas, guys, had a beautiful move here above this trend line. But look, closed above, and we're getting rejected again. Remember, did it confirm? Nope, didn't confirm above. A close above doesn't equal confirmation if you've taken the winning trader series. Right? So understand that real quick, that again, you have to confirm above, and we're getting rejected back below this level. This level's been an amazing level in terms of keeping and controlling price. Price keeps trying to break up, and it keeps getting rejected. Eventually, remember, the more we hit a level, the more likely eventually it breaks through. But let's see where it goes in the next few minutes. All right, or the next few hours, the rest of the day. One thing I want to just mention, guys, we have launched a scanner on our website. If you go to the verifiedinvesting.com, it's under the AI and algo trading scanner tab at the top of the website. I just want you guys to be aware of that. In fact, if I go here, if we can flip over to my screen, I can probably bring up Verified Investing's website here. There we go. and I can show it to you right here. So see this right here, the Oracle Trade Setup Scanner. This is only for stocks at this point, but we're going to be launching a crypto scanner as well. And if we click on that, you can see again, this is an amazing one. The $100 is only if you're a member of Verified Investing, so just be aware of that. So again, that's only if you're a member of the trading room. Otherwise, I think it's like $275 or $279, something like that. But the idea basically is that this scanner literally finds trade setups. It's incredible, and there it is. There's the price of a non-live day trading room member right there. But ultimately, guys, this is an amazing scanner. This is for day trading only. We're going to have a swing trading one debuting in a couple months. But I'm excited about it. I mean, this is legit. We're using this scanner to find day trades every day in the Apex Live Day Trading Room. Members that use it in the Live Day Trading Room are taking trades on their own now, day trades. It is incredible. The success rate is high as well, incredibly high. And yeah, it's rock star level. So this is a lot of the methodology is going into this, and the scanner is automatically scanning the market, finding these setups. But take a look at it. It is worth taking a look, no doubt. And remember, this is just for stocks day trading. We'll be debuting the crypto one for day trading, and then eventually crypto swing trading, crypto stock trading as well. Even commodity, we could do the commodity swing trading one as well in the not too distant future. All right. On that note, guys, I got to get over to my trading room. We'll see some of you guys there, obviously, and that's awesome. Hopefully we get some good action today. You guys have a great rest of your day. Thanks for tuning in. Take care.